Hello everyone, welcome to my channel for yet another video on Nifty Bank Nifty analysis. Today we will take a look at the daily chart and weekly charts for both Nifty and Bank Nifty, and we'll also take a look at the key levels where we can trade tomorrow and for this week. Also, I'll tell you about the FI and DI data for the last trading session. All of that, but before that, a disclaimer. All the views and opinions expressed in this video are for learning purposes only and in no way is a buy or sell recommendation. Any buying or selling decision or any trading or investing decision needs to be taken after consultation with your respective financial advisors. Viewer discretion is advised. So what I'm sharing with you all right now is a Nifty spot chart on a daily time frame, and as you can see here, the candle that we have is a bearish candle, and the candle formation with its previous candle is a bearish engulfing pattern. Now this clearly suggests that there could be more downside if tomorrow's candle happens to close below this Friday candle's close. The key levels to watch out for tomorrow would be 23,677 on the upper side and 23,388 on the lower side. Now, if the price breaks and sustains about 23,677, then in that case, the first targets would be 23,800 and even 2400, 24,000 in the coming trading sessions. If the price breaks and sustains below 23,388, then in that case, the first target would be 23,300, followed by 23,200 and 23,000 as well. Now, in between these roughly around 300 or 290 points, the market is expected to be range bound. Also, I have been telling this in my previous videos as well. There is a chance that we will see some correction because of the rally that we have seen in the past. So the levels 23,000 is most likely to be retested in the coming trading sessions. Let's quickly take a look at the weekly charts as well. Now on the weekly chart that we have, we see a bearish candle, but it is more of a doji. There is a upper wick and a lower wick, both seem to be of the same size, and the previous candle that it had was a bullish candle. This current week's candle close is above the previous week's candle close, so this suggests that there is bullishness in the market. The key levels for Nifty on a weekly time frame would be 23,677 and 23,388, which is similar to the daily candle. However, if the weekly candle close is below 23,388, then in that case, it may signal that there will be further downside. And if the price breaks, or rather, if the weekly candle closes about 23,677, then in that case, it would suggest that there is still some upside left in the market. Let's quickly look at Bank Nifty. So Bank Nifty candle again is a bearish candle similar to what we saw for Nifty, but this particular candle has a lower wick, a big lower wick, and this suggests that there is buying seen at lower prices. Now it is also important to see that the open and the highs are more or less close for the Friday's candle, which suggests that there have been sellers right from the start of the trading session, and they brought the price lower. But at lower prices, we also found there were buyers that entered in the market. However, the candle did not close above the previous day's candle close, and the formation that we have is similar to what we have in Nifty, that is a bearish engulfing. So tomorrow's candle, if it closes below this particular Friday candle close, then in that case we are in for further downside, some more downside, and probably this middle of the purple channel might be retested in the coming trading sessions. The key levels to watch out for Bank Nifty would be 51,955 on the upper side and 51,211 on the lower side. In between these 930 points, roughly around 730 points, the market is expected to be range bound or sideways. If the price breaks and sustains above 51,955, then immediate target would be 52,000. However, 52,000 is a psychological level, and if the price sustains above it, we may see a short covering rally which may take the price further up to 52,200 and 52,300 as well. On the other hand, if the price breaks and sustains below 51,211, then in that case we may retest the levels of 51,000. Again, 51,000 is a psychological level, so if the price breaks and sustains further below 51,000, then in that case we may see a long unwinding and the price may retest 49,800 and 49,600 levels in the coming trading session. Sorry, 50,800 and 50,600 levels in the coming trading sessions. Let's quickly take a look at the weekly chart. Now the weekly chart for Bank Nifty is suggesting strong bullishness. The candle that we have is more of a bullish Morubozu types of candle, and it is also at an all-time high. However, as I have been saying in my previous videos, uh, Nifty and Bank Nifty both are trading in at all-time high zones, and this is an uncharted territory. So we may see a reversal at any time. We are not sure where the profit booking can start, or we are not sure where the market may decide to turn negative based on some global economic factors, right? So this probably is not the best time to uh, enter into an FNO upside trade, according to me. And if at all you want to invest in stocks and hold it for the next 5 years, that's definitely a go-to option. However, if you want to still trade FNO, I would suggest wait till the price comes to a support level, and from there if you see a positive candle, then in that case go ahead and enter with a enter on a upside trade with a strict stop loss. Also, since the price is trading at all-time high, it doesn't suggest that we go ahead with a downside trade as well. That's not the way to do it. So at even if the price moves further up, keep an eye on the candlestick pattern that is formed, and if you see a negative candle formation, then in that case initiate a downside trade, but again with a strict stop loss. On a weekly chart, the key levels for Bank Nifty are 51,977 on the upper side and 49,888 on the lower side. Now this particular candle has this particular gap, as you can see based on the candle, is almost like 1,000 points gap. Now these 1,000 points, in these 1,000 points the market is expected to be range bound, and if that happens, I think that market is going to be a market for the option sellers, not for the option buyers. So it's best as option buyer to stay out of the market right now at this point of time. However, if the price breaks and sustains above 51,977, the immediate levels 52,000 also seems to be like 30 points away, which is probably not the best time to enter. But if the price sustains above 52,000, then definitely yes, with a very small quantity one can enter into a trade, and the targets could be 52,200 and 52,300 because of the short covering rally that we may see. And it will be essential to either have a trailing stop loss or at least book partial profits up at each of the juncture. On the other side, if the price breaks and sustains below 49,888, then in that case we may see a further downside, further downfall, even long unwinding rally, and we may see the price touch 49,500 as well as 49,000 due to some panic selling in the market. So this 49,888 happens to be a crucial level in the coming trading sessions. If this level breaks, then in that case we may retest 49,000 as well, right? So trade with whatever quantity, very less quantity, and whatever you can afford to lose, right? Trade with that amount of money. Also, the DI and FI, if let just give me a minute. Okay. So FI had sold 1790, that is 1,790 crores of Indian shares on Friday, and DI had bought 1,237 crores, that is 1,237 crores of Indian shares on Friday. So there is a net 500 difference negative between the shares shares purchased and sold, and this clearly suggests that the FIs have sold. DI had sold the previous day, but they had bought 1237 crores again on the next day. So since both the FIs and DIs are not showing the same intent, it is very hard to say whether the market will go up or whether it will go down. There is no directional move that is getting suggested right now. However, to trade cautiously, don't enter into upside trade at this point of time where Nifty and Bank Nifty is trading at all-time high. Also, don't short the market right now because you never know from where or till what price this market will go up, right? So stay out of it right now, or trade with very less quantities at the resistance at a very key level. If you see a negative candle, go ahead with a downside trade, or at a support level, if you see a positive candle, go ahead with the upside trade, but again with a very small quantity and with the amount that you can afford to lose, right? So that's the analysis from my side. Do let me know in comment section whether this analysis is helping you or not, and whether you were able to take trade on Friday, whether you made profits or whether you booked losses. Also, if there's anything else you want me to cover as part of these videos, do let me know. And do like, comment, share and subscribe to my channel if you haven't done it yet. Also, just before we wrap up, a small disclaimer: making money in stock markets is not easy and there's no shortcut to make money. However, with continuous improvements and over time, we can definitely make money from stock market. So thank you so much for watching. Stay tuned.